All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market opened up down about 20 points here today, it's being blamed on the heels of a bad jobs report. And to say it was a bad jobs report would be understating it a little bit. It was a pretty awful jobs report, and one that is typically seen in recessions. And it is one that the likes of people like Larry Kudlow, out talking on the news circuits this morning and basically saying it was a silly number, it'll be revised up, and it's quirky, and using those types of words to discredit it. And, he may ultimately be right, but bottom line is... definitely continuing to show erosion in the data. Perhaps maybe more erosion in the China data last night, where we saw exports fall by 21%. Chinese exports down 21%. Yeah, that's a huge number. No, that's just a big number. It's not, it's not unheard of. It's not a first time or anything like that. It's just a big number. And, that's what the market's kind of waking up to, facing here this morning is just some of this, weakness in China, combined with the U.S. jobs report here today. Now, you've heard me say jobs report Friday is notorious for reversals. Right. So, we get a big gap down on a jobs Friday. I'm much more apt to, take stuff off and look to play a reversal than I am to, say, oh, well, okay, we're gapped down. Let me go chase that gap. And, you kind of saw that from me here this morning. I did pop out of my Microsoft and go to cash, and I haven't jumped back into anything here just yet, and I won't while I'm on video. But anyway, want to go out here and take a look at it's Friday. I know I'm not talking about my challenge trades during the week and what's going on with them, but on Fridays try to do a little bit of a recap and kind of discussion about them. So want to do that here this morning, and really. Just kind of go look at a few of these and take a look at what's going on. Sorry, I thought I had them up, and I don't. I need to log in here real quick. Let's see if this will work. All right, we're getting there. All right, here we go. All right, so over the past week, made a few trades here, and let's see here. Entry February 27th on Halliburton was kind of the the last one that I talked about last week, but this was what, Wednesday of last week. Got out on Thursday, and one of those where, man, almost wish I was still holding those, right? Would be very, very, very nice. I did jump back into Halliburton here this week, but really this week I've made four trades since we've talked last, and got into both Halliburton and J.P. Morgan, last Thursday. And added both of these, and both of these similar, in terms of concept, in terms of chart, and what's going on. So let's just kind of go take a look at them. Here's Halliburton. And you can see with Halliburton this kind of just erosion that we had seen, the lower highs, coming into play. I got in the next day, it snapped on down a little bit. Looks like a small move now, but took it. I bought back in on the rally, just that rally back to the 7-day moving average, right? Just kind of that typical rally back. Now, one of the things I was a little concerned with was the volume on the rallies. We started to see a little heavier volume on the rally, so I was a little bit concerned there with it, and it's why I didn't go as big in. And then, we got the push back here to the low, and I made a decision instead of adding more, I'm going to wait until the next day and, kind of see where it goes. And, if it does break down, look to add some more. And the next morning, it opened up, and it was pretty flat, and it just shot down. And this was Wednesday morning. It came down to these lows from earlier in February. Now, there was no real volume on these lows, so there's nothing to say, this is a big support level or anything else. But, in terms of the way the market was moving and the way things were going, I decided to take my trade off and say, hey, you know what, I'll buy back in on a little rally up. What's my risk? Well, my risk is I don't get a chance. And you know what? It just didn't give me a chance. It sold off into the close. It sold off yesterday, and it's selling off again here today. So it never gave me a chance, back in. Where it sits right now, it's at kind of the full retracement. I'm not interested in shorting it right here, this far from the 7. But it's a trade that for the challenge, and I kind of consider the trade, both of these the same trade. I know it doesn't show up that way, or it's not considered by most that way. But about $1,200, in gain here on Halliburton, which was much needed for the challenge, and pretty much wiped away the XLY. Which is, it started off this challenge in a hole, and nice to have the Halliburton kind of wipe that away. Now, here's J.P. Morgan, and I got into J.P. Morgan the same time I got into the second leg of Halliburton. And this was, let me just go to the hourly chart here. This is one where on the hourly chart, we get this breakdown right here, this spike up and then breakdown. And a lot of times when you see these, the next leg is going to be lower. And, so I'm watching it, and, it rallies, and then it starts to fade back below the 7 hour. I have a weaker, daily chart, and I decide to jump in. But with market conditions at the time, with what's going on at the time, I know I can't just buy and hold this put option. I have to kind of, be a little jumpier, and I have to set some marks. And, for me, this was just, hey, a gap above the 7, I got to go. I just have to go. I can't take that risk. And the next morning, it gapped above the 7. And I had to go. I had to take my loss. And I know ultimately during that day it reversed. And there were several of you that pointed that out to me many times. That, J.P. Morgan's reversing. J.P. Morgan's, yes, it is. And, I was watching the reversal going, okay, do I get into it? Do I jump back in? You even heard me on video talk a couple times. I am looking to jump back in. And we broke below the 7 hour. And I decided not to get back in at the close. And then the next morning, the exact same thing happened. Gap up above the 7, shot up, and then melted into the close. And I looked at the option values, looked at where it was, and looked at some of the other things that were going on out there. And I just said, I'm going to go play in some other pastures right now. And, ultimately, J.P. Morgan's down a little bit. But it's down, about 1.5%, where other things are down, significantly more there. And, I'm still looking to get into J.P. Morgan on the downside. But it's still one that this is much more market dependent, market weighted than some of the other stuff that I have played. Right? Until Microsoft. In fact, J.P. Morgan is the most market-driven stock, that I have played here. FedEx, not all that market. Twitter, market, nah. HAL, market, nah. Pepsi, nah. Microsoft, XLY, J.P. Morgan are the three that, hey, they're the most market-weighted. So I took my loss, moved on, and, went forward from there. Then here on Wednesday, we saw the market selling off. and it was selling off into the close. And there was this, I'm watching it, watching what's going on. And, we see a lot of things going down to short-term oversold conditions. The market vibe is still neutral at this point. And so I'm looking and going, okay, where do I want to jump in? Do I want to take the risk of buying some puts on something that's oversold and, expecting a further sell-off? Or do I want to buy a chart that is, well, pretty? A chart that's really bullish. And if we look on this day, in fact, let's see if I can. Let's see here. I'll just bring this over. Now, this is what Pepsi looked like on this day. Nice little bounce off the 7-day moving average. Nice little bullish engulfing candle coming into play on a stock in a very strong upward trend, and really looking like it wants to go and hit 120. And so I said, all right, I'll go buy a half position, and I'll look to add if it gaps up the next morning, if it breaks higher the next morning. And so did that, and then the next then the bell came. The market closed, and Pepsi was downgraded. They were downgraded, and it wasn't a traditional downgrade. It was more of starting at underperform and with a $100 price target. And I saw in the pre-market after hours trading down to 116. I was like, okay, we'll see what happens. And then in the morning, it was trading down to 116. Right, that's where it was trading. And the downgrade, everything else, market was set to gap up, and the market set to gap up. I had bought a call, and the market gaps up, and my call gaps down. But within a matter of moments, we saw the market sell off, and we saw the market sell off hard. And I made a comment with Pepsi that Pepsi's one of those, when the market goes down, it has had a tendency of late to go up. And, to kind of be a little different there than the market. And we saw that. We saw buyers step into it, and, they pushed it up above 117. And, this is just one where, there's nothing overly technical about my exit here. But, watching the market tank and then watching Pepsi break 117, break back down, have the downgrade associated to it. It was just something where I looked at and I said, you know what? There is a sizable chance that if I decide to hold this, that the stock is going to be $3, $4 lower from where it is right now in the next few days. And it's a lot greater chance than what it was before, given the fact that the market itself broke down, right? But more so now, that downgrade takes some of the short-term positive away, right? Takes some of that. And I had a short-term option, right? I didn't have an option that could last for a while. I had a very short-term option. So I just had to make the decision, move on. And go. And it was one where for me it's a quick, okay, boom, out, done, all right, next, forget it. And that's kind of what I've done. And it's pulled on back here a little bit. Maybe a little bit of an interesting entry here today again, but this is an example of making a trade that is just totally technical driven, where my fundamental thesis is not the same as what the chart was showing. And you know me, I'm bearish fundamentally with Pepsi. I think Pepsi's incredibly overvalued, and I absolutely agreed with the downgrade. I think this is just one of those companies that has defied valuations here for a while. Pepsi and McDonald's both have really defied valuations for a while. And, so it's one where, okay, if I'm going to play the technical upside, I'm going to be a little jumpy. I'm going to be a little jumpy. I'm going to do a half position. Okay, I'm much more eager to pop on out if it's not, working my way. When that fundamental bias is opposite of how I am trading. Now, some would say, well, never do that. Don't trade opposite to your fundamental bias. Okay, great, fine. To each their own there, with that. But, my fundamental bias on Halliburton is overall longer-term bullish, right? But, definitely willing to play the downside there on that. So, that was Pepsi, and kind of a non-event in terms of the challenge, in terms of, any gain loss there. Commissions cost more than what I made on the trade. But that kind of gives me a lot of, kind of a lot of nonsense in here. FedEx essentially a wash. XLY a big drop. Then there's JP Morgan and Twitter that, are kind of offset a little bit by Hal. And still sitting with this XLY hole. With that, and then yesterday we get this interesting action in the market, and wow, shocker! Friday, jobs reversal, markets reversing higher after a negative jobs report. I know it doesn't sound logical, but bear market times, this is almost. I don't want to say automatic, but almost automatic. But then there's this company called Microsoft, and I'm going through the market as we're watching the market rally, and Microsoft rallying here yesterday, late morning. And I'm watching things, and I'm looking for some of those stocks that showed some breakdown and are snapping back to their 7 hours. So stocks that are breaking down on their dailies and are snapping back to their 7 hour moving averages on their hourly, and looking to play that combo. And there were a few, and when I'm looking at them, most of them were in the tech space, which I found to be interesting. I was thinking much more along the lines of industrials, transports, even some of the energy. But a lot of this was like Microsoft yesterday, and the hourly chart. We get this breakdown here, right? We get this breakdown. And then this hourly chart comes back to the 7 hour moving average and starts to weaken off of that level. And it was just pretty picture perfect, here with Microsoft. This has been a stock that's been outperforming overall. So I'm not, it's okay. I'm not 100% confident, but the odds are strongly in my favor. So while I look at it, while my stomach doesn't feel, settled with it or anything, when I come in and look at the overall dynamics, it's exactly what I want to see. And so I said, all right, let's go. I put half the challenge into it with where the challenge was at the time. And I ran with the short-term options. Sold off a little bit and then bounced into the close. And, look, this is just something I looked at and said, all right, if he gaps up tomorrow, I've got to go. I've got to take it and move on. And that was my plan there. If it gapped up today, I got to take it and move on. Now with the market, it obviously gapped down, and I took it and moved on. And that's just more for the fact that you see how far it is below the 7 hour. Got a little bit oversold here, and the MFI here on the hourly is below 20. Not exactly a place where I want to hold a put option and and say, hey, you know what, down we go. And I think there's strong risk that Microsoft snaps back above 111 and hits a new high. When we just look at it from a pure technical standpoint, there's some strong risk on that. So I took it. It paid off pretty nicely. The options moved very nicely there, and it dug us out of this XLY hole, and I can forget about XLY now and move on, and puts the challenge slightly in the green here. As we go forward, and I've approached this challenge with a bearish bias, and it's one where most of the days for the challenge have been bullish. And in fact, the challenge started right back here, and Market's pretty much in the exact same spot. So, okay, we've gotten a little growth in the challenge with the market in about the exact same spot. I do think there's still more downside to come overall in the market, but it would be highly unusual for the market not to have some bounce spots, associated with it. So, I'll be looking to get into things as we go forward, and looking for some of the same setups like a Halliburton, like a FedEx. There are some that frankly I've just I've missed, like FedEx here. You know what? It just broke yesterday too quickly, and look, I'm not going to go short it. In this market, when we talk about the dynamics out there, where the two big powers in the world, right? You look at U.S. President Trump, who, whether you support him or not, or whatever political leanings you have, there's a strong influence with the market. Okay, has been since election day, since pre-election, been a strong influence with the market. It's a different type of president, different type of approach, right? Most presidents, they don't talk much about the market. U.S. President Trump, they're very, very different. And we have the Fed, who the Fed knows, for as much as the Fed is supposed to be independent from political pressures, the Fed absolutely knows that if they let the market drop big because of their actions, there's going to be major changes with the Fed. They know that. So the two big parties out there both have incentive to drive this market higher. So anytime there's a pullback, we're going to start to hear comments from those officials to try to drive some sort of bouncing. Now, will they ultimately be able to drive it? Will they be able to be the big driver and push things, the way they want every day? No, they won't. And in fact, when the market loses confidence in what they're saying, because what they're saying is not what the reality is, then their words are going to fall on deaf ears. And in fact, when they speak, the market is going to do the opposite and just say, hey, they're out of touch. They have no idea what's going on. But we see here today, even U.S. President Trump stepping up and what did he say? I put it in the message feed here. Let me come here to it real quick, since I have it up. There we go. But President Trump outside the White House predicted a very big spike in the stock market as soon as these trade deals are done. He added, if they get done and we're working with China, we'll see what happens. There's a lot of incentive there. It is very much looked upon that U.S. President Trump, has a good chance of being reelected if the stock market and economy are strong, and if they're not, the chances diminish. Whatever side you sit on the aisle there, fine. I'm not here to be political. I'm just talking from a market standpoint, from an incentive standpoint, right? We have now seen over the last 2 months, we have seen China come in with some stimulus measures. We see the European Central Bank announcing a few policy stimulus stuff yesterday. And the reality is they don't do that when the economics are picking up and starting to accelerate and the outlooks look good. They do those when the economics are starting to weaken, the outlooks are softening, and that's what we continue to see out there, and that's the bearish argument. And, could that change? Yeah, it could change. Could a trade deal change that? Yeah, it really could, right? It really could. But, at the same time, it is still an overhang. And, the market simply has not priced in the risk of a trade deal not happening. Right? That's not priced into the market. That is absolutely not priced into the market where the market sits right now. Okay, so anyway, that's where the challenge is. Kind of my thoughts on the market. I'll continue to do the same thing, that I've been doing. Risk reward exposure. It just comes down to that. There's different stuff going on all the time in the market. Different stuff. This day, next day. Earnings analyst. Politics, geopolitical stuff. It's always happening. That's the constant. right? That's always happening, and the only thing that a trader has any control over, right, has any control over is risk-reward exposure. Somebody texted me yesterday and asked me, do you think the market's going to go down tomorrow? My response was, if I knew, I'd mortgage the house and play it, right? It's one of those where you can look and you can look at the setups and you go, okay, probabilities are this. You suspect this, and this could happen. But you know what? Everything's a brand new day. There's new events, there's new actions, there's new stuff that happens. And, it's about, okay, what's your risk, what's your reward, what's your exposure? Those are the three things you can control, and those are the three things I can control with the challenge, and that I will continue to, drive and control with the challenge more than, playing, stock market, which way is the market going to go tomorrow type of a thing, and just kind of setting up where the odds are in my favor, and we'll continue to do that going here forward. Thanks for hopping on. Have yourselves a great one, and we will talk to you later. Take care.